Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to a Saturday edition of Java with Jared. Hope you guys are doing fantastic, that you had a wonderful week, and that everybody got unburied from this incredible snowstorm that we had this week. So hopefully everyone got through it okay. Well, rates finished the week slightly worse than where they ended last week. It was really not a big movement, but just, slightly negative. There was a very little action this week in terms of economic data, or really even a lot of activity this week. Friday was Good Friday, so the market was closed, and we didn't see a whole lot of economic data that was introduced into the market. Of what we did see existing home sales come in, and that missed the mark a little bit. That came in at a number of 5.08 million. Expectations were for about 5.37 million, and the previous month was at 5.47 million. So off the mark a little bit. Part of that was because January's numbers did get revised upward pretty significantly. But generally, those are pretty good numbers, and we all know what's going on in terms of inventory, so it's hard to imagine a lot of homes actually being sold when there's not a lot on the market. We did see new home sales miss the mark a little bit. It was in line with expectations, but just slightly off at 512,000 units for the year. Durable goods also came in this week, and that showed a negative number of about 2.8%. But what led to the little weakness here in interest rates was that, I told you last week that the Federal Reserve had met and introduced the minutes, and Janet Yellen was very dovish, meaning very friendly to the bond market in terms of not increasing credit, thinking that inflation was under control and wanting to be very wary of it. Well, there were some Fed members that came out this week, and they were a lot more hawkish, meaning a little bit more aggressive in terms of maybe having to increase interest rates. And that caused the dollar to strengthen a little bit and caused money to flow outside of the U.S., and so interest rates lost a little bit of ground. But generally speaking, a pretty quiet week. Now, next week is going to be a huge week. There's going to be a lot of economic data that's released into the market. We're also going to see the employment report come out. So the market is really just going to be on pins and needles, kind of seeing what happens next week up through Friday, see how the jobs numbers come in at, and that will help give a gauge on what the market predicts the Federal Reserve will do during the next meetings, if they're going to increase credit or not. So we'll keep you informed as to what's going on. Hope you guys had a wonderful week, and hope you have a very happy Easter, and hope that you really enjoy family and enjoy Sunday. So if you have any questions, always feel free to give us a call. Thanks for joining me with Java with Jared, and we'll talk to you soon. Bye-bye.